Hello guys. Hello guys, how are you doing? So, uranium update. Yes, uranium finally we're seeing some good price action. And again, later on we will dive into the U.UN. We saw exactly what we wanted to see at that third low. This could be a big one, guys, hopefully. We will go through, our list here and some stocks. I think some of the stocks is waking up here, and we will have a dive into these guys. The bigger breakouts, not yet here, but if you want to be a little bit more aggressive, I do think you can. You can enter into some of those guys there. Let's have a look. URA, the overall, the big one that has been on for like 15 years, I guess. No, 15 years. Yeah, actually 15 years. That was quite dead on. And where are we today here? Let's zooming in. So good. The big double bottom here still holding. And again, the URNM, we will look at that in just a minute here, which we bought like a week ago, 10 days. I can't remember. Last week, I think. And yeah, we did take out the level roughly 25 here. That was exactly, the next hurdle that I had. Um, Again, we're still in a downtrend. You can still see we are definitely coming down overall, but I do think and that is the three impulses that we need for this to be over. Um, for the next month or so, the only thing that can invalidate the view that I have is if we break down from, roughly 23, 22 here. That would be devastating because then we're seeing sub 20 all of a sudden. But that is not in the cards at this moment in time here. So today, URA is up 3%, which is, again, good. To me, again, it doesn't matter if a stock or a sector is up 1% or 10%. If it breaks my levels and, the formations that I have, I don't care if it's 1% or 10%. That is everything that we need to know. And today here, we cleared that pivot low and these two highs here. And you can see yesterday, or was it Monday, we tagged there, broke down, we pulled back, and now we're back above. Again, here, that was the triangle that we were watching when we started to hit that double bottom, and we broke out. And again, we have been rallying just a tiny bit here. So for now, really good thing to see. Momentum on the 2 hourly. Again, we're trying to pierce it. We have broken the short term. Now we have the midterm and then the long term here. So we're definitely trying to pierce through all that momentum, which is can be difficult. It won't go in a straight line, but I could see, this one here getting hit. And the faster we do it, the better. The faster we do it, the better. And the reason is the buyers are so much stronger compared to the bears, right? So if we do it, in a very straight line, cool. Will we pull back? Sure, why not? And then we can hopefully break, right? Also that is the big one, by the way. So if you're not in uranium, you can, again, once we start to break here, anything above like 27 at that point in time will be extremely positive. So yeah, good day for uranium, 3%, which is good. So we are seeing the first, stepping stones for that big bottom here. So three impulses here short term. By the way, short term might be midterm because this is roughly half a year worth of price action. And then we have the overall broader where 23 is still holding as support. And yeah, ideally we hold here. That would be tremendous. For the URA, a bit more clean, in my opinion, is the URNM, which was also the reason why I bought into that, because the setup was more clear. And the reason is, again, we bought that double support there. We are rallying a tiny bit here. Sure, it sounds good, but again, let's see how it performs. Again, we nailed that one there. So our risk reward is extremely clean, and we know when to get out, right? So we're having a really good risk reward because we bought into it right here, actually. I believe that the next big resistance for the URNM is 37. These two lows here. So, and we are now at 30, roughly a buck and a half away from that level. So we should hit that, this week. Yeah, we have 2 more trading days, so why not, right? It's only a few, it's like, still 5%. But again, in uranium terms, that's basically nothing. So let's see once we get there. That is my next hurdle. Right now I can see, okay, we have done the double bottom here. We held the mega double support. We're bouncing good volume, not there just yet. However, the next hurdle for me is these 2 big lows here, and then we see what happens, right? That is the one for me. So, yeah, URNJ. Also, we had that bit of a double support where the low support being the lows, basically the all-time lows, and we had that red channel. And from here, we are up like 20%. I can still see us go all the way up to kiss the underside of that channel there. That will be very stiff resistance, and that is, again, ideally and then we pull back and then we get back in, and then it's game on, guys. Once we start to trade back above the yellow here, we are starting to getting into a whole new level of thinking. We have to think upwards and not only down here, because that break was devastating. We basically collapsed, but yeah, we dropped like 20-30%. Back test here and getting back in would be extremely nice. Extremely nice for the URNJ. Still under heavy pressure. Heavy pressure might be a big word, but we are making still, lower lows and lower highs. So yeah. And the nukes here, I really do enjoy nukes at this moment in time here. We are at for some reason, the level here is not on, but we have it there. That was my level where this is actually compared to the mining ETF, URA, and so on. The bottoming structure here for the nukes ETF is better, meaning you're getting a more clean bottom. And the reason is we might have to go to the Heikin-Ashi just to give a better view because it's so thinly traded. But that, guys, to me, is a textbook bottoming structure. So once we start to trade north of 42, we actually are at that point starting to look to, hey, we might have a big rally on our hands. Broadening structure here, right? That is the megaphone. And we have the uptrend channel here. And we actually had a double support there. We are confirming the bottom here. Everything looks really awesome above 42 for the Nukes ETF. And this is, again, for the new people, maybe this is not a mining, what's it called? Mining ETF, uranium ETF. This is what I call the tech uranium. We're talking LEU. We're talking SMR, small modular reactors. We're talking Rolls-Royce, which also does small nuclear reactors. You're having all the infrastructure. What else do you have? The LTPR. You have the SLX. I think from the Australian uranium market. So this again is a great way to play it. The only thing that still takes place is it's still somewhat related to AI, because SMRs has been linked to AI. So when NVIDIA drops, it sometimes take down the commodity component of the nukes here, with it. So, but to me, again, 42 on a daily closing basis looks extremely like a really nice sweet spot for, hey, bottom double support held, looks good at that point in time. Really nice, really nice. URA, we go back to standard candles and focus on, again, there's a little bit more going on here, but to me, the focus that I've had here for the past month or so is that channel. We were breaking out, we're back testing, we're rallying, meaning URA is outperforming short term now the spot price. But overall, the take that I have on the entire ratio here, this to me is the big cuff, accumulation pattern. But this is the final spring low. And what you see is actually, a test here. This is, if that's the case, we are in for one hell of a ride. Still to this day, ever since I started to notice this like 2 years ago, I will say, maybe 1.5, it's still playing to perfection. You can do the overlay of that whole, Vikov, and you can see it's actually very, very dead on. And this will be, in 2 years' time, maybe, 3 years, if this plays out, this will be one of my best calls ever made. Again, will I be right or wrong? I mean, who knows? But for now, it's still dead on what I would think to see, from that pattern alone. So good here. And what are we waiting for now? Again, we have the broader channel here. Pretty neat all the way around. So anywhere, above like 0.44, maybe a tad higher or a tad lower, depending on how we get there. Maybe 0.43 is insanely bullish for the miners. So we are roughly 10% away from that whole, situation. Yeah, pretty cool. URNM divided by spot price, very difficult chart compared to the URA divided by the spot price. We're still stuck in that downtrend, right? We're still stuck, nothing to really do if you want to play the ratio until when and if we break out. At that point in time, hey, we are going boom all the way up to here, right? Boom, there it is. So that's also what I think will happen, by the way. I think this is the higher low that we're waiting for, and we're going to break out, and then we're going to take these out here as well, and you have the higher high. Typically, you get the higher high first and then the higher low, but I think that is the higher low, and we're going to break out. That is my views and thoughts there for the ratio. Here it is. I will spend a little bit more time on this. Zooming out, guys, is the U.UN. So basically, you're looking at the spot price, more or less, right? The pattern. It's a bit more clear because it's a bit more traded compared to the spot price itself. But again, to me, that right there is the tiny handle, until proven otherwise, of that cup and handle. And if that's the case, we are having a lot higher prices coming in, in 5 years' time. And we have been discussing this $19 to $20 for the supply and demand zone here. And why is that? It's because you can see every time we get to that zone, you are either getting rejected from either way. So coming from below, resistance, right? Resistance again, resistance here. Coming from above, support and support. So that is a very clear line in the sand, that is the big one to be above. Zooming in on the daily stuff here. Again, that was just a massive surge. That was a very big move, but the miners didn't actually follow. You had Cameco, UEC, and some of the other guys do well, but the small guys, they didn't participate in that move. And we peaked out at roughly 33. First impulse, yeah. Bear flag, boom, there it is. Second impulse. Breakdown here, you started to go sideways. You couldn't clear the upper trend line, and you're breaking down into the third impulse and our supply and demand zone. So again, textbook flag. I know I have been saying that for a very long time. And again, it was 1 year ago we peaked out at roughly 34, and we reached roughly 20. So short term, here is the red little squeeze fractal here that we looked at for the past week, where we started to see, hey, we are getting tighter and tighter, and that, ladies, is when you know that something is up. Could it have been broken down? Sure, of course it could. But that's when you know, hey, this is a big moment, and we went sideways for basically a week. And then, what's that today? Yeah, this today, we broke out, boom, 5%, almost 5%. This is, again, a very good sign. It's not 100%, but it's a very good sign to me that this is the third and final low in that bull flag at supply and demand zone at roughly 20. In my view here, we're going to grind it higher, all the way to 25. And then we will have a pullback, yeah, sure, why not? And then something in those lines I could easily see coming in my view here, something like that. Something like that could very easily be what is in the cards. Again, predicting these things is very, very difficult, but that's the first step to me that, hey, that's the final low in the spot physical uranium trust, and therefore also higher, what's it called? Higher spot price. Yeah, spot price. That was the word there. So again, very early, but I still like it very, very much. Yeah, that's beautiful. Again, buying, when we started to trade above 20.2, which we talked about yesterday and the day before, that is your entry, and you have a very clean stop loss, 6, 7%, and you gain all the upside. Very high favor risk reward investing into the commodity itself here. Again, it doesn't matter if we're right or wrong. The risk reward here, risking 6% with potential. Again, if you really are one that can withstand and want to go max greed, you have all the upside. And even if you go to the big resistance here at 33, which is also where I expect to be a lot of resistance, you're risking 6%, you're gaining roughly 70. That is 12 to 1. Again, very tight. And that's why we like these tight spots here at critical levels, because when it breaks, very often are we correct, and you can have a very tight stop. It's just, again, risk reward is all that matters. Good, that was a long talk, but again, to me, it was very important because it was a big, big breakout there, short term. Again, hopefully we gain a lot of momentum here. Would be truly amazing. Good. Sprott, this is the what's that? That's the uranium spot price itself, the U308 futures, and that trend line here, we broke out and we're back testing now here. This channel here, again, I was playing around with it. The uptrend here, very difficult to chart on a log scale, but we are very close to support here. You can see same thing as the 20 on the Sprott physical, 63 here and all the way down to 62. I think that's where we bottom. I think we bottom right here. Again, we will know in like a month or two's time, but again, I like it. The gold silver ratio here, we were so close. We were so close. Again, I have my levels, and yes, there's a lot of things going on here. This is just very short term, trying to play it cheeky. And anything below here, 87.8 roughly, 0.7, 0.8, again, it's not, doesn't have to be that precise, but anything below that, and I think we will start to see, I think we have already starting to see, but we will start to see even more of the cracks in the ratio. And when that happens, especially gold mining and silver mining will do insanely well. Copper miners, yes. Uranium, yes. Iron, yes. What else have you? Platinum, yes. All these guys will do really well when you see those collapses in the ratio. Again, if you don't believe me, check out what happened there, right? And there, when we actually had these were false breakdowns, but you actually had breakdowns from that trend line there. So when you get these big drops where silver outperforms heavily, mining is all you need to know, and in my opinion, need to be into. It's a sweet spot, but again, here I think we have the final little. You can see here the higher highs, and then I think we will have like a lower high here, and then break down. Good. Uranium, too messy. We will not dive into that. URA divided by the U.UN. Same thing here. Again, this is basically URA divided. Yeah, here it is. Let's spend some time actually, because I think it's very clear when you get these visuals here, instead of me trying to explain it. So this is URA divided by the U.UN. Again, roughly the same as the spot price ratio. And to me here, I've tried to highlight these phases here where you have the SC, it's there, ST, that's the one there, spring, test, so spring, test. And then again, you have the next one here, and you should be in for that leap into the low, the LPS, coiling, and then going higher. Over here, we have the AR, and you have that high here. Boom, there it is. Again, the only thing that is not textbook is that higher low there. But hey, if I think it's okay. And this one here is that one there. I mean, to me, it is, again, until proven otherwise, that is what I'm going through, going by. And therefore, over the next, what are, depending on the time, what's that, 3 years? We could be in for a period if this pattern holds true. Again, I might have, it might be a little bit more like that, given the speed of that. But anyway, I think you get the idea. Something like that, right? So we could be in for a period. And I say could because projecting this long out is, again, can be difficult. We could see, outperformance easily 200-300% of URA compared to the spot price, the U.UN that is. And we just looked at the U.UN and we could be putting in a low here, meaning the spot physical uranium trust over that period of time, my thesis is it will go up quite substantially, and we will have uranium miners actually outperforming that by a factor of 2 or 3. So very interesting here. Again, all we can do is follow and see, is it still according to what we expect? Sure. And if that's the case, I mean, we just try to ride out what we hope to be a big move for the miners. And it could have been starting today again, reigniting, that is, with that break on the U.UN. It's a nice candle volume. I would have loved to have like a 3x volume candle or something like that. That would have been truly amazing, but still, we will definitely take it. Good. Miners, again, long video, but I think a lot of things happened today, especially with the U.UN. Really important moment here. SMR, I just discussed this one in the video. You can find it as well. But again, here, to me, this is a buy all day long on SMR. The thesis, you can see that in the other video. Sky Harbor, same thing. We talked about it there, roughly 0.35. And internal break, again, you can see a bit more in-depth thesis on that. URA we have been discussing. LAM, Laramide Resources, is, and I have been saying this for a long time, one of the best looking long-term setups. And to me, what is happening here is when and if we break that blue bad boy there, we are going to see, we are now at 0.6. When we break, it will be roughly 90 cents, and we could easily see, $2, $3 all the way up here. Triangle high, supply and demand zone, short-term resistance. So that will be a mega move. And also here you have contraction. This is, perfect long-term breakout here as well. Contraction, next move, boom. That is what I could easily see be in the cards. Again, if that is the case, again, we have to, like on the ratio chart, we just have to watch and observe. Is it still according to what we hope to see long-term? Then we don't do anything. But I would definitely be a buyer here with the expectations of a break. And then we could, if things goes really ham, really, really pushing it, in 2 years' time, we could be looking at, roughly $3 or so, maybe a tad lower. But again, that is quite substantial. You can see here short term, we have the break of the downtrend here from basically half a year, more or less, 4 months, but still we're breaking out here, showing that we could be in for that move to the blue, pull back, and then potentially go. Personally, I have a huge position on Laramide. Keep in mind, I bought that's like almost 5 years ago, 4 years ago. So yeah, so up 100%. I mean, it's good, of course, but again, we have had a 4-year period where we've basically just been chop. And I will be looking to add, not here because I have such a big position, but I'll definitely, when we break the long-term stuff here, I will definitely be adding more at, anywhere above 80 cents or so. I will definitely be adding more into Laramide. And the first hurdle is the triangle high there at 1.1, 1.2 roughly. So yeah, very long uranium video. Have a great day, guys. Cheers. Bye.